If you're like most people in the UK and you have questions about mortgages or remortgages, you might feel uncomfortable speaking to someone, or you might be getting your information online from people on TikTok. You shouldn't get your advice from people on TikTok, and you shouldn't feel uncomfortable asking questions. That's why I wrote my book, A Mortgage is a Really Big Loan. And it's also why I do these sessions to explain the basics of getting a mortgage. So today I'm going to be talking you through the basics of getting a mortgage, demystifying it, no jargon. I'll also be explaining the key factors, which are credit, income, and deposit. So I get it. As mortgage professionals, it's quite often very easy for us to speak in a way like all of our clients understand everything that we're saying. So we can use a lot of jargon. And I guess that's the same thing in any industry. You have a lot of acronyms and you just banty them about and you figure the other person understands. I think with mortgages, it's a little bit different because people, especially adults, they feel like they're supposed to know about these things. So often they won't ask questions, or they'll go to somebody else. If you're a mortgage broker, they'll just go to somebody else. So I do these sessions to explain the basics of mortgages. Today I'll be talking about credit, income, and deposit. My name's Anthony Lindsay, and I've been in finance for over 30 years, so I know a thing or two. I come at mortgages from the perspective of informing my clients, giving them all the tools that they need to make the very best decision. The videos that I make are not designed to replace getting professional advice. So always, always, always speak to a professional. I don't give tax advice and I don't give legal advice, but I will give you great guidance on how mortgages work and give you some information on how to ensure that you get the very best deal. Don't forget to check out my book, How a Mortgage is a Really Big Loan. But let's get started. So, what are the mortgage basics? It can feel as if it's a very complex, dark art, but getting a mortgage is pretty basic because it's going to come down to three things. I label them credit, income, and deposit. So, your credit, your income, and your deposit are the key things that are going to factor into what type of mortgage you get, what lender you end up with. Make sure you listen all the way to the end because each of these things are dependent on the other things. So let's just start with credit. So, what's the difference between a credit score and a credit profile? A lot of people confuse the two because most bank accounts will give you like a free credit score. So it's a number, and you may have a good credit score or a bad credit score. But when it comes to mortgages, we need to understand what your credit score is. But equally as important, we need to understand your credit profile. So, your credit profile is things like missed payments, late payments, CCJs, which are county court judgments, or defaults. A quick tip with CCJs and defaults: I found in my experience over 10 years of working in collections and pre litigation, quite often people will be notified of these disputes. And because they feel that they have the moral high ground, quite often they won't pay the bill. My advice in general is if it's getting to a point where you're going to get a default or a CCJ, pay and then dispute. It's a lot easier in most cases to get your money back than to resolve or repair your credit. So, one of the ways of avoiding that is to make sure that you get a credit report from Check My File once a year. I would say you should check your credit report at least twice a year, but at least once a year, you should check your credit report. And the best platform that I found, and we use at our firm, is Check My File. That's going to give you your consolidated credit report with all three credit reference agencies, and it's going to give us all the information that we need. This will enable you to resolve your credit issues before you apply for a mortgage. In my experience, people don't realize what's on their credit report until they've seen their credit report because they've started the mortgage process. So I would advise get your credit report, check it out. If you have any issues, Get those things resolved before you apply for your mortgage. So, as I said, it's your credit profile and not your credit score. So the CCJs will impact your ability to get a mortgage because a lot of lenders will not lend or they won't give the best rates to people who have CCJs, especially if they are unsatisfied. Defaults, same thing. Repossessions, there are some lenders who will lend if you've had a repossession in the past. Most of the lenders want to see that that repossession was more than 2 years ago, but there are exceptions, as with everything that I usually discuss in my videos. The other thing to think about is your debt to income ratio. So keeping your payments up to date is great, but it's not enough. I've had instances where we have a client who may be on a salary of 50,000. They have a high credit score, no missed payments, no late payments, but their debt to income ratio is really high. What does that mean? That means their salary is 50,000 and they may have 30,000 pounds worth of debt. Yes, it's being paid on time. And yes, they haven't missed any payments. And yes, they have a great credit score, but the income versus the debt is quite high. Some lenders will view that as a caution or a red flag. Some lenders won't lend, but as with everything, there's always a specialist lender that will look at that and take that individual on a very case by case basis. The other thing that you want to think about is making sure that you go to Money Savings Expert. Money Savings Expert is a fantastic website. It's Martin Lewis's website. He's a consumer advocate, trusted. He has a website where you can go and you can find out about everything. You can find out about mortgages, savings accounts. You can find out how credit works. So I always advise people to check out Money Savings Expert and sign up for the newsletter because you can get some great information. Getting a mortgage doesn't have to be complicated. And that's why I want to make sure that you have the correct advice and understand how they work. So that's a little bit about the credit side of things. So get your credit report and understand how credit works. Make sure you watch the rest of the video because I will be explaining other things that are required in order to get a great mortgage rate. If you're looking to get a mortgage, you're going to want to understand how much your income is. Now, that might sound like a silly statement, but quite often when I ask people, what's your salary? They don't know. They'll tell me how much they make per month. Beyond getting that employment contract, quite often people, as long as the money comes in every month, they don't know the particulars of their employment. So if you're going to be getting a mortgage, what you're going to want to do is make sure you understand the structure of your employment contract. So this is things like, are you full-time permanent? Are you a contract worker? Are you temporary? How are you classified by your employer? What does the contract say? And another note with this, if you have more than one job, check your contract to make sure that you are working within the contractual terms of your employer, because some contracts do require that if you're working a second job, that you have permission. So if you go for a mortgage and you want both incomes to be included in the salary, and you have a clause in your employment contract that requires for you to have permission from the employer, the bank is going to want to see that confirmation that you've been given permission. The next thing is contractors paid via umbrella companies. Believe it or not, some people don't realize that if you're paid through an umbrella company, it can make it a little bit more challenging to get a mortgage. Not every lender is going to be comfortable with the umbrella company setup. They want to make sure that the umbrella company isn't something that you have some interest in. They want to make sure it's a legit umbrella company, because you may have seen in the news about a lot of the scams to do with umbrella companies. But if you're a contractor, make sure when you speak to your mortgage broker, you explain to them that you're paid through an umbrella company, and also prepare yourself that some lenders will not lend if you are paid through an umbrella company. As I said, you want to also understand if you're part-time, full-time, and as I discussed, the second jobs are great, but the lenders want to see a few things: Quite often, they'll want to see that you've been at the second job for a while. They'll want to make sure that the second job is sustainable. So if you're working 40 hours at one job and you have a second job where you're working 30 hours, they won't view that as sustainable. They want to make sure that the second job isn't something that you just started, because they know that some people, to boost their income, will go out and get a second job. These are all the things that you want to discuss with your broker before you apply for the mortgage. If you're considering ways to increase your income, why not look at the gig economy? So, the gig economy is things like Fiverr and Upwork, places like Etsy, where you can go and you might have a skill, talent, you might be able to bake, you might be able to do crafts. You can actually sell those services online and make some additional money. Again, I'm not giving tax or legal advice, but if you are making additional money, make sure that it's being accounted for correctly and you're paying the appropriate taxes. Another thing you can consider doing to increase your income is starting a business. Starting a business isn't easy. Running a business can be stressful, but it can be a great way to generate additional money. If you're starting a business and if you want that income included in your mortgage, you'll need to make sure that it's structured properly. If it's a sole proprietorship, make sure that you're filing the appropriate taxes. If it's a limited company and that's appropriate, make sure that you have a good accountant that can guide you on the best way to ensure that your income is registered correctly. If you have a talent, as I said, you can bake cakes, you can do things on the side. But one of the first things that I learned as a bank manager is, if it isn't documented, it didn't happen. So if there's cash money just going into an account and there's no way of tracking where that money came from, don't expect to be able to include that on your income statement when you're doing your affordability assessment with your mortgage broker. I always say make sure you speak to a mortgage broker 6 months in advance, because they'll be able to guide you through these things. So, this is some great advice on how to boost your income and how to make sure that you have the right income structure when applying for a mortgage. Why not write a book? Everybody has one book and one song in them. Yes, I've written a book, and I'm not just here to plug my book. I'm here to say you have experiences that can benefit other people. So why not write a book? I use a platform called KDP, Kindle Desktop Publishing. The whole process is free and it's print on demand. So if you're looking to get a mortgage and you're looking for ways that you can improve your income and make additional money, or potentially go into a whole new field or career, why not write a book? My book is about mortgages and about financial literacy. So if you're looking for a mortgage, it is a great book to have. But you as an individual, you should consider writing a book to improve or increase your income. The other thing that every lender is going to want to know when you're applying for a mortgage is, where is your deposit coming from? This might sound simple. This might sound like it's something that's fundamental, but believe it or not, some people don't understand that if you have a savings account that is a ISA, certain ISAs will not pay the money towards your deposit to you. They actually pay it to the solicitor at the point of exchange or completion. So that money that you've been saving in that ISA or LISA or whatever scheme it is, make sure you check the stipulations in there to see if that money goes to you or if it goes directly to the purchase. So a LISA, or lifetime ISA, is a fantastic way of saving money to get your first home. It has pros and cons. Make sure you check out my video on lifetime ISAs, because if it's not for your first home, it might not be the best product for you. But if you're looking to buy your first home within the next 5 years and you're looking for a way to boost your income, you can get up to £1,000 a year tax-free on a lifetime ISA. Be sure to read the stipulations, because if you don't use it appropriately, the penalties can be quite harsh. As far as savings for your deposit, make sure that the savings are easily trackable. What I mean by that is, if you're saving for a home, you should have a high interest savings account. The best way to do it is, when your salary comes in, you transfer your salary into that high interest savings account. That way, the bank can see how you got the money in the first place, and they'll be able to see at a snapshot how much you have towards your deposit. If you're getting a gift from family, make sure that it's a gift and not a loan. The family member will be required to sign a gift letter. Some lenders won't allow your entire deposit to come as a gift. They want to know that you have some skin in the game. Other lenders will only accept gifted deposits from family members. Specialist lenders will look at everything. So you may find that as we talk through all of the different things you need to get the very best mortgage, you don't meet all of the criteria. Don't panic, don't cheat, don't lie, don't make stuff up, don't try to fool the bank, because there is a specialist lender that will work with you. So just be open and honest with your broker, explain the circumstances, and an experienced broker will be able to match you with the best specialist lender. Another topic I talk about quite a lot is what I call cultural savings schemes. I've come across so many of these in every single culture. As someone from West Indian parents, I understand something called a partner. When a lot of West Indians came over during the Windrush, what they would do is they would do something called a partner. So, what they would do is, let's just say you have 5 people in this partner. Each month, to make it easy, everyone will give one person £1,000. And then each month, one of the people will get the £1,000. Never do this. This is not a good way of savings. It's not a way that is going to help you get a mortgage. And at the end of the day, it's kind of pointless because you only get back the money that you've put in. What you could have done is put that same money in a high interest savings account. And not only will you get the money you've put in, you'll get some interest on it. So avoid cultural savings schemes. Make sure that you're doing everything above board on the level, and make sure that it's traceable, make sure that it's auditable, and make sure that it's not going to impede your ability to get a mortgage. Savings and gifted deposits are a big part of getting your first mortgage, especially if you need that additional help, but make sure that you're doing it correctly. So we've talked about credit, we've talked about income, and we've talked about deposit. Make sure you like, share this video. Make sure that if you have questions, you put those questions in the comment. I'm here to answer your questions about how to get a mortgage, how mortgages work, and how to ensure that you find the best mortgage broker. These things can change absolutely everything as far as how you get your mortgage and who is willing to lend to you. You always want to go to a mortgage broker because you want the most choice. The things that you're going to want to establish are how you earn your money. So, this is your income, this is your employment. Making sure that your employment is documented correctly, making sure that your bank statements are prepared and your income goes into your designated bank account. So, what I mean by that is when you're doing a mortgage application, you'll need to produce a bank statement. The bank statement will need to show your income coming in, and your pay slips need to match the bank statement. So the bank is going to look and say, they got paid on the 12th. I see it going into the bank account on the 12th. That's what they need to see. And as I always tell people, this is the point at which you should maybe put some money in your savings account. This is where you can transfer money from your current account into your savings account. So, as part of the documents that you're going to be required to give your mortgage broker and send over to the lender, you're going to need the bank statement, you're going to need proof of deposit, and you're going to need your pay slips. So this just makes it a lot cleaner. If you're like some people who have multiple bank accounts, do be prepared to provide at least 3 months worth of bank statements for each of those bank accounts. Another thing to think about is, what kind of passport do you hold? I hear people talking about rates and obsessing about rates all the time. I think it makes people feel like they're really intelligent when they say, oh, I heard that the Bank of England raised or lowered the bank rate. This is significant in getting a mortgage, and it's also significant in what type of mortgage you'll get. But you have to think about, what kind of passport do you hold? Quite often, the rates that are promoted or advertised by banks are based on what we call the vanilla customers. So these are the customers that are UK passport holders, good credit, PAYE income, etc. So understanding that not having a UK passport or maybe having indefinite leave to remain or skilled worker visa, these things are going to impact which lenders you can work with, because not every lender will lend based on a skilled worker visa or on an indefinite leave to remain. They'll have stipulations on how long you have to have been in the country, how long you have left on your visa. So as part of the documents that you'll need to give to your broker, you'll need to show your visa status, how long you've been in the country, and how long you have left on your visa. Your credit history is important, but remember, it's not your credit score, it's your credit profile. Clear any CCJs, defaults. If you have anything that you're paying out on, pay it down as much as possible. In a lot of cases, having a smaller deposit is better than having a big deposit and having a lot of things that you're paying out on. This is why the advice of always seeing a broker 6 months in advance of when you think you're ready to get a mortgage is great, because they can help you tidy up the credit, dispute anything that's on there that's not supposed to be there, and increase your savings. Deposit, 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 deposit. I'm going to say deposit a lot of times because when I speak to most individuals about a mortgage and I say, how much do you have for your deposit? They'll say a percentage, 5%, 10%, 15%. I don't want to know the percentage. I need to know the pound amount, because you're going to need to provide a bank statement demonstrating that you have that money. The reason why the percentage is not useful is for two things. And I'm going to build on this quite a bit now. Quite often people will say 5%. Let's keep the math easy. If you were looking at a house for 100,000, then 5% would be 5,000. So 5% of 100,000 is 5,000. If you then go out and look for a house and then you find a house at 110,000, that 5% is no longer that 5,000. It's going to be a higher amount. But if you only physically have 5,000, then that's going to mean you're not going to be able to get a mortgage at 5% down. So my best advice to anyone looking for a mortgage is A, don't have a price range on a house that you're looking to purchase. Have a maximum amount. People will tell me all the time, oh, my price range is 200,000 to 270,000. That's a huge gap. So say my maximum house price is 270,000. Based on that, if you wanted a 10% deposit, then you'd say, I have a 27,000 pound deposit. We can work with that because most people buy at the top of their budget. I'll say it again. Estate agents know this, and most people in the industry know. If someone has a budget between 200,000 and 270,000, they will not buy a house for 200,000, not a residential anyway. They're going to buy at the top of their budget. So I don't want to know your range. I want to know your absolute top price. That way we can get you a mortgage that is based on your top number. And then maybe you come in lower, but you know you can't go higher. We know that it will always fit as long as you don't go above your top budget. So that means when you're looking at houses, if you know your top budget is 270, don't look at houses for 290. Look at houses for 150 to 170. Okay. And the other reason why I say this is estate agents know how people think. They know that people buy at the top of their budget. So if you say your budget is 200 to 270, they're not going to show you houses at 200,000. In fact, they're going to probably show you houses at 280 or 290 because they know people are going to get emotional and go above. So, best advice when speaking to your broker, know what your top budget is, your top amount is, and give them the amount that you physically have in your savings that you can prove. So I went in a little bit about deposits because it's one of the key things that I think people confuse themselves with or try to outsmart themselves or the broker with. We want to talk about how much money you actually have in your bank account that we can track and trace and prove that is yours. And for a deposit amount, we need to know the actual amount that we can get you the very best deal. I hope that's been helpful, and I hope that you'll like, share, and comment on this video. I'm here to provide the best advice that I can. I'm not here to speak to you in a way that you don't end up going and speaking to a professional. I'm just a guy on the internet. My LinkedIn is at the top, and I'd love for you to connect with me. But always speak to a professional about your individual circumstances. Let the broker know what you're looking to do, what your goals are, what your budget is. Explain these things, and they'll find the best mortgage for you. What you need to do if you're looking for a mortgage. I do a lot of videos explaining how mortgages work and explaining the different terminology. Here are the key steps that you need to do if you're looking for a mortgage. Step number one, speak to a broker. Always speak to a broker at least 6 months in advance of when you need your mortgage. I've gone through this in detail in other videos, so make sure you check your link, but make sure you speak to a broker at least 6 months in advance of when you think you need the mortgage. The next thing is tidy up your credit. So go to checkmyfile.com, and download your credit report. Review your credit report. If there's anything on there that shouldn't be or anything that you need to dispute, do those things before you apply for a mortgage. Do them before you apply for a mortgage, because sometimes it can take a while for those things to be cleared off your credit report. Tidy up your bank account. Cancel any direct debits that you don't need, any standing orders you don't need. Check through, make sure that you're not paying twice for the same thing. Quite often people will have homeowners insurance and content insurance that covers things, and then they'll have another insurance that's covering the exact same things. Make sure you clean those things up. Review your existing mortgage if you're looking for a remortgage. Understand where you are with loan to valuation, how much equity you have in the property. I have a great video where I commented and reacted to Martin Lewis talking through loan to valuation. Check that out in the description. And save your money. Make sure that you're saving in a high interest savings account, not your current account, because in most cases, you're not going to be getting the very best interest rate. So go to Money Savings Expert, find a great savings account. Make sure you do your due diligence. I'm not giving legal or tax advice, so make sure that you do speak to an accountant about the implications of getting money on interest. And if you have questions, make sure you speak to your broker. Ask the questions. Don't be embarrassed. You're probably going to be purchasing the biggest purchase of your entire life. This is where you and your family are going to be. Where you live determines a lot about your life. It determines the school that your children go to, which then means it's the people they're around, which then means it's the access and opportunities that they get. So when you're looking for a mortgage, ask questions. If you're not 100% crystal clear on something, ask questions. Don't be embarrassed. Most mortgage brokers understand that they do it every day, but you don't. The average person may have had 2 or 3 mortgages in their entire lifetime, whereas we might be doing 7 to 10 per week or per month. So ask the questions. If you have a young person, or if you know someone that's just moved to the UK, or you just want to be more financially savvy, make sure you check out my book, A Mortgage is a Really Big Loan. Now, this book is not just about mortgages, it's about finance from someone who's worked in finance for over 30 years, both in the US and the UK. That person is me. I explain things in an approachable way and non-technical way, and I share information from my experience on working with real people every single day. The book is available on Amazon. Please support the book. If you have a young person going to university, it's a great gift. If you know someone that's just moved to the UK, it's a fantastic gift. And if you just want to understand your finances better, make sure you check it out. My name is Anthony Lindsay, and I provide information to individuals to help them understand how finance and how mortgages work. This way, when you go and speak to a broker, or if you're trying to plan your future, you have the information you need to ask the right questions. What I provide is in no way to replace speaking to a professional. Always speak to a professional. Don't get your tax, legal, medical, any type of personal advice from some guy on TikTok or some guy on YouTube. Always speak to a professional who can understand your circumstances, the needs of you and your family, and can give you the very best advice. Make sure you like, share, and comment. And if you have a topic that you'd like for me to discuss in one of my videos, be sure to put that in the comment.